The most prominent macroeconomic event over the first quarter was an announcement from Trump on his desire to impose global tariffs and the resulting market volatility caused by the speculation surrounding the details of these. As a result, we saw global equities fall, while more defensive assets performed well. In absolute terms, more bond-heavy, lower-risk funds delivered modest positive returns, while higher-risk models were down. UK equities significantly outperformed global equities over the past quarter. Given many peers have a large domestic equity bias, this was a headwind to performance relative to peers over this short period. However, this was offset by the greater diversification, active management, and the downside protection held within these portfolios. So, as a reminder, this year we see 5 key themes. 1. Continued US expansion. 2. Divergence across economies. 3. Japanese strength. 4. It's this concentration of the US stock market, which has been particularly in the news over the last few weeks. And 5th, the uncertainty that the Trump administration will bring. So, in these conditions, making and implementing effective decisions is challenging and often costly. Just now, we're really focusing on managing risks and outcomes and not taking big bets. It is important also to stay invested and not to lock in losses. We're making changes for meaningful opportunities and setting the risks and not because we need to. Ultimately, we believe our portfolios are structurally well positioned to navigate this current uncertainty. So overall, performance was relatively flat across the first quarter. Our greater asset class diversification, however, with lower exposure to equities overall, did help us. Outperformance was seen from our active managers in the portfolios, as we would expect, and we also saw strong performance from our bonds held. For example, US bonds were up 4.5%. Finally, strong performance within infrastructure, such as our Atlas Infrastructure Fund, which returned 6.7% over the quarter. In particular, history has shown the importance of staying invested through times like these. The Atomos portfolios are designed to be structurally resilient, enabling considered decisions. For now, we're maintaining positioning, but we are alive to opportunities, reflecting changes to outlook, market movements, and risk.